Good morning, Face. Did you guys know that Face is a place where people come to become a trading ace? How many people have improved in the last couple of years hanging out with the team and me every day? Coming up on our 2-year anniversary, because our mission is to build up and edify traders every day. Maybe we don't accomplish it every day, but I know we do at least part of the time. Right, guys? So, anyone become a better trader being in this environment? Because if you have, you'll become even better as a subscriber, is my point. So this is the tip of the iceberg. Will be very important for your trading development to be in the members chat and immerse yourself for more than an hour of analysis and half an hour interview. You can't learn experience. It only comes with the passing of time and living through stuff. So you also have to put in the time. Your best traders, I found, are the hardest working guys. They'll spend hours and hours on analysis every day, prepping for everything. Okay, so I want to talk about a couple of scenarios here in the market. And here's the NASDAQ. So I believe this is possibly the high, although it did confirm on the 1 hour. All the stock indexes, actually, NASDAQ's the strongest one this week. As you can tell, we've been diverging actually at least since here on the 4 hour. So the beginning of the month from this peak. And what I think can happen, and it was reinforced, that's why intelligence gathering is important. When Grega was here yesterday, he talked about being skeptical on Mondays, price action on Mondays, and he's looking for correction in the market too, in the S&Ps. And when I hear that from Grega, who's an experienced guy, maybe not a dinosaur like me, it builds my conviction that there is potential for what I think can happen here. So after this, I think we're forming a flag here. We could correct. We've broken about 90 points, maybe a little higher, but to me it looks like we're setting up some type of failing rally, whether it's here or a little bit higher. If we get some China news, that's one thing. So how do you get an outside week? And I tweeted about this, the anatomy of an outside week. I know it's probably hard to see with the fibs, but you gap above the previous week's high. A precondition is an inside week, which is, well, we didn't. We just had an up week last week. So the first thing is to take out the previous week's high, then begin to trade lower on the week, which is happening in the S&Ps, not quite in the NASDAQ yet. And then the third and final step is to take out and finish by Friday last week's low, which I believe was this day of 69.70, or yeah, may have been that 69.80. And look at all the confluence at 69.80. That's back to the 61.8 level. On the weekly, it's a moving average right there, the 50 week. So this 7,000 level in NASDAQ is really an important level, and it's only 100 points from here. So first we have to take out this daily moving average, which is a 200. Okay, everyone's bullish. It's a classic, herd type signal trading above or beneath the 200-day. Then they'll look for crosses, golden cross, death crosses. But trading back under this low of 70.70, this moving average comes in there 70.63. So back under 70.60, that's going to put the 200 moving average. Guys saying, well, we're not above it anymore. Maybe I'll give it some tolerance. But taking out 7,000, we could end up with an outside week. Part of what's helping that scenario develop is its Siamese twin, and something that we talked about and Grega confirmed yesterday, that he's negative. You know, I called it a megaphone top. Some people have had different views. They were calling it an ascending triangle with the breakout here. Blake showed head and shoulders in both crude and heating oil and was skeptical of it correctly. So they've traded pretty much together during the decline last winter. Crude actually outperformed to the downside for a while before the stock indexes began to really catch up and then take the lead in the race to the bottom. So crude, I think, is part of it. You know, I think that all rallies could be sold up towards 56, 56.30. This was another big area. It was an area also identified by Blake. It was a low Thursday before we came in on crude's traditional strength of the weekday, which was Friday. And although the markets made a new high yesterday, crude did not. Put in a failing rally, and then I guess Donald Trump was here in face and saw Gregor Horvat's view on crude and tweeted the crude was too high. So he agreed with Gregor Horvat that crude was too high and brought it down. We have Fed speech too. Okay, thank you, Luis. Yeah, so it's Powell, I believe, today. We'll see, you know, how dovish he is. See if that helps the market rally to one more new high. So basically, I think there's a possibility for a pretty negative week. 7,000 is kind of, you see 7,000 in the NAS 100 and tell you there's something changing. I'm not talking about a crash, I'm talking about a correction. But at least this huge move that we've had to the upside in S&Ps since the low, which, you know, everyone thought, and my work would have said that we would have gotten a retest. So, you know, a lot of people thought we'd rally and get a retest or even a lower low, but maybe higher momentum. Instead, it just turned into a V bottom. So keeping an eye on this. I was wrong about the yen yesterday. You know, I should have listened to Blake. He had a rectangle in here that he wasn't going to do anything with it. And, you know, I was attempting shorts in here, got stopped out over 111. Now it's underneath where I got out. Possible this was it, you know, stop hunt, right? Took out this high, confirmed high, another high, or maybe this is drive 2. But this drive is not confirming. The chart of the day that keeps the confusion away was on the yen. I recommend you guys go take a look at that chart. There's some, you know, great numbers for you to pay attention to, because I do think if that does occur with the S&Ps, we could still get this break in US dollar yen. It's going to look pretty ugly under 110.50. I may attempt some type of short on a rally and wrap it up with the dollar. So the dollar's not quite there. You know, 96 is kind of the line in the sand. I have a line above it. Not sure what this line, green one, was for. Moving averages here too. So we'll see. You know, if we could get down here, I think you have to go with it, but you also have to be willing to change your mind. If you're going to like buy a break in the dollar down here or sell a rally in euro, I wouldn't short the pound, because the tape bombs, pound's doing extremely well. And, you know, nothing wrong with just trading the dollar index, so you don't have to be worried about your trade selection. Dollar goes up, dollar goes down. You're there instead of deciding, well, what should I do? You know, short commodity currencies or the euro or the pound. So this is going to be an important area for the dollar, and in the euro, thought we could get up towards 113.80. Didn't quite do it so far. The high's been 71, close enough for government work. Have we taken out stops over this high? 1371. 30. Oh, look at that. 1371 and a half. 1371 and a quarter. Yeah, so you could probably say, depending upon your platform, that anyone had a buy stop above these highs probably got elected. So thinking we're going to get a turn up here. And what's going to be interesting about it is I think if you start getting closes back above 114, that we're shifting from a dollar bull to a dollar correction. So, Blake always talks about it. All you could do is control risk reward. And whether you're bullish or bearish, where market's in a position where it turns good or bad from there or closely from there are very good trades because it's defined. In fact, pros know how to reverse their position. So someone might attempt a short between here and 1380, and instead of just getting out of the way, they may go, you know what, this euro's turning good. I shouldn't just be out of my shorts. I should be getting long, looking for much higher levels. Everyone with me? What's amazing, Katsuba? CAD yen, yeah, that's CAD yen. Greg called it yesterday. Yeah, you're having a decent day. Okay. I actually thought I'd have one more shot to sell it for a 3 drive, but obviously it ended up being a 2 drive. So pretty negative divergence. I thought we might get this, Here was 1, 2, but instead it's a failing rally. You might want to be considering taking some partial profits in here. And you never go broke taking profits, Bernard Baruch. So with that being said, I'm going to see what Blake is thinking going into today. I know we have Andre with us today. Also, the guest is a pretty young guy who's become pretty well known, Spencer Lee of at Synapse Trading, and he's been interviewed on every major, financial periodical, and he's traveled to 50 countries training traders, and looking forward to our first interview with Spencer. So stick around at the top of the hour and hear about this guy's trading journey. And he combined his trading journey with globetrotting. So should be a great interview. Looking forward to it. It's always cool to meet new people this way. How are you this morning, Blake?
I'm doing great. How are you doing?
Okay, buddy.
Yeah,
I got a little sleep last night.
You did? Oh, that's good.
Yeah.
That's good. Okay, so the cable is very strong today. We are probing some pretty key resistance, and we broke above the 131. I don't know if I was here yesterday morning talking about the 131, the break, the bullish flag, but yeah, obviously
you did, yeah.
Yeah, in the chat room, I've been talking about this break above 131. We broke above 131 in Asian trade last night at 131.30, and then we continued the breakout today and pushed up into pretty key resistance. This is a big inverted head and shoulder pattern. We're well above the 200-day moving average. We are pushing into some major resistance going back to mid 2018. We're pushed right up against all of these really key levels. A break above 133, and the pound is going to go. Now, there's the meaningful vote tomorrow to try to pass the Cooper Amendment to prolong the Brexit deal. And by the way, Amanda will jump in if I'm jacking this up at all, which I might be. Regardless, I have been playing the pound long through the euro pound. So if you guys are not looking at this chart, I shorted this yesterday at 86.80 ish, 86.70. Yeah, I guess is 86.80. So I had a really good short on this yesterday, and I've been holding on to my short position. Now we are below 86.20. This is a big deal, guys. 86.20 has held us for the last basically since forever and a day. But you got to realize that it's not just we're having a breakdown. This is a big okay, I'm going to ask you, Dale. What do you see here is very significant?
Basically, it looks like tons of distribution, a year of consolidation, and a breakdown of the consolidation.
Well, yeah, so consolidation, you're right. We've got a double top here,
Oh,
right?
okay.
Here's your neckline. Okay,
Yeah.
that double top points to down here.
82-ish?
I mean, yeah, it does. I mean,
Okay.
measure it, it takes us down to 82. But I'm not saying that we're going there tomorrow. It's just, if we sustain this breakdown over the next, let's just
It's like Wiley.
48
Okay,
hours.
now I know. Now I know what it reminds me of. Wily coyotes standing on a ledge before it breaks off into the into the canyon.
Well, and we have these lower highs, and look, I don't know what's going to happen tomorrow. I don't know why it's pushing the way it is, but tomorrow is obviously a pretty big deal for the cable. And the fact of the matter is we have the pound that's created lower highs. We have a double top, a break below 86 pence. Puts us down, below the 200-day moving average or the 200-week moving average, and really down, down somewhere down here. And I think that's realistic. Now, if you look at the cable itself, and it's hard to be bullish the pound. I mean, but try being bullish the pound for the last, a few months, and you're going to just you got in your butt handed to you. And believe me, I'm as hesitant as the next person. I've got a pretty sizable position short euro pound, which the pip ratio for the euro pound is like $1.50. So you got to be a little, if you're trading a dollar account, you got to be a little careful with the pound, because it pays you more, but you also lose more when it's working against you. So you got to keep your stops fairly tight, yada yada yada. But you look at the cable and you think about like this inverted head and shoulder pattern. It's not like we haven't been here before. And if you think about like if this inverted head and shoulder pattern plays out, it takes us above 140 again. Is that out of the question? No. I mean, you think about like the pound and kind of what we've been doing, and post Brexit, we've following the Brexit decision. I mean, we're really in a big range anyway, right? And if we rallied to 140, let's just say we did. I mean, we were just there at the end of 2018. I mean, we could end up being in some sort of bigger, longer term consolidation, right? So I look at the 140 level and go, well, it's not doable. Obviously we could go a lot higher if we get a Brexit with a deal and it seems favorable for the UK, and then you've got a situation where the pound moves a lot higher. But in terms of where we're at right now, is this out of the question? I don't think so. That doesn't mean I'm long the cable right now, but I think you got to be very long the pound. When I say cable, I should be a little bit more clear in my description as far as the pound dollar. But I think you've got to be a little, if you're short the pound dollar or the pound in any which way, shape, or form, you really got to think about the euro pound and what it's doing right now. And I, like I said, I have a short in the euro pound. I am looking to add. I don't know if I'm looking to add necessarily. I've added this morning at 86.14. I'm not sure if I want to keep adding, onto my shorts as of right now. But I think that if you are trading on the short side of the euro pound, you can probably put your stops at 86.50, because this is a big breakdown. Put your stops at 86.50, and it's not great risk reward, but if the breakdown sustains, it's going to be, I think, manageable risk, because you're risking 86.50 to make possibly 84, 80, 85, 84 and change. I don't think that's that's a lot of risk for a potential reward of much lower. So I'm really looking for how we close today and the euro pound before I start adding, knowing that we do have a vote tomorrow. And I do believe it's a big deal. And there's, it's interesting. There's a lot of people that are trying to play this counter trend. And I'm like, why? The reason why I ask why is because this is such a big deal. This is like the most significant chart I've seen yet in the cable is the euro pound and is the breakdown of the euro pound. So if you're shorting the cable, in any way, shape, or form, I have to ask why, because there's so much flows that go through the euro pound. This is a big break. Let's not forget that we are right now. We're at lows that we haven't seen since May of 2017. That's a big deal, right? Big deal. So you got.
I think so.
Yeah,
I can barely remember 2017.
I can't remember yesterday.
That's a long time.
What did I do yesterday?
No, not yet, in 15 years, I'll believe that statement. Not yet.
Okay. All right. Yeah. Okay. But I like to mess around. Like I don't have a very good memory, but I actually do have a very good memory.
Photographic, man.
It's not photographic, but I remember numbers really well. But I actually, my wife harasses me that I'm getting too old. I maybe drank too much beer in my lifetime or something. That I'm like, no, I forget things that are not important to me, like conversations that I had with my wife. But birthdays, anniversaries, that type of thing. But as far as the numbers go, yeah, I remember numbers pretty vividly. But regardless, the pound is, like I said, the pound is strong, and to be short the cable or short the pound, you got to be a little careful, just because this is such a big currency breakdown, pair breakdown, and it's the euro pound too that's significant. So
it's nice to have conviction, isn't it, bro?
It is, and I don't, I don't sit here and look at the euro and say I've got a ton of conviction, or the cable itself and say I have a ton of conviction. Although we do have a nice bull flag pattern in the pound dollar. I mean, this is pretty significant, but we're just heading into really key resistance. So let's talk about some of these other majors before Andre gets here. So we got the euro, and the euro is still hovering around this 38% retracement. I sent out this chart this morning to the ForexAnalytix subscribers. This is a bullish wedge. Now, why is it bullish? Because we have consistent highs and higher lows. So it is a bullish wedge. That doesn't mean it will break to the upside, but that does mean that the risk is higher that it breaks higher. So if I had to throw a number at it, I would say there's a 65% chance that we break up and a 35% chance that we break down. If I had to just throw a number at it, doesn't mean that the 35% chance isn't going to win. It can. I'm just saying that there's a higher probability of an upside break than a downside break. Now, if you think about that, and you think about like what the pound is doing, well, what happens if the euro breaks out? If the euro breaks above 113.72, would that put the pound that's already got upside momentum up at 133? I think so. So, again, this is another reason why you should have to be a little careful shorting the cable if the euro dollar, breaks out. And I'm not saying it's going to, but I'm saying that, we do have a nice little bullish wedge that is setting up. All right, now, then you take currencies like the Aussie. Well, what do you do with the Aussie? The Aussie, I have no freaking clue. I would be a seller up at 72.50, and I'd be a buyer at 70 cents. So what do you do with the Aussie? I don't know. I shorted the Aussie yen overnight. And if you guys don't know why I shorted the Aussie yen, and I shorted it in the chat room, I shorted it at, my average was at 79.62, I think, and I got out of it last night at 79.30 something. 35, I think, is where my limit was. Anyway, I'm just playing up against this range. This is a channel, and while we're below 80 cents, or excuse me, 80 yen, you play on the short side, and then you get down towards 79 or 78 yen, and then you start to be a little bit more careful about being short. But this is what I've been playing with the Aussie yen. Now the Aussie dollar, again, not really too sure what to do with that. The Kiwi, same thing, big triangle. I'd be a seller up here at 69.25, but not right where we're at. Dollar Canadian, extremely bullish. Crude oil rolled over yesterday, as Coach pointed out, and I don't look at crude as being the megaphone pattern, as he pointed out, as he's looking at it, but I still look at it as crude's dangerously weak. So the dollar Canadian looks like, and I'm a little bummed out that I missed this. I missed the buy here. When crude started to roll over, we were trading at 131.50, whatever, and I was so focused on the euro pound and the Aussie yen that I just dismissed the dollar Canadian, and I'm very irritated because I had all the time in the world to buy 131.50, 131.70 yesterday, and then next thing you know, I look over and we're trading, near 132. We're at 131.90 at the end of the day. And then here we are, above 132 and change. So now the dollar Canadian looks like it's going to make it up to 133. And keep in mind, this is still a big inverted head and shoulder pattern. It still is. This is not negated, guys. This is still, and you take this dotted line and you make it dotted, make it thick. This is still a big inverted head and shoulder pattern. Any which way you slice it.
Good symmetry too, bro, doesn't it? I mean, time-wise, you look for that, don't you?
Yeah, I do. Time. I mean, if we bolt up to 133 like later today, I would be, really looking at this with a, careful eye. It still is a inverted head and shoulder pattern, still playable. Dollar Mexican peso, I have bids at 19. Didn't get hit yesterday, but we're coming back down a little bit this morning. The dollar Mexican peso, Mexico actually announced that Mexico, look at Mexico, they're going to impose tariffs on countries that they don't already have previous agreements with. So U.S. and Canada are obviously not included in this, but Mexico is going to start imposing tariffs themselves on China and other countries. So dollar Mex got a nice little boost up to 1924 yesterday, and I still have dollar Mex exposure. But I want more. I want more at 19. So if we get down to 19, I'm a buyer there. And if risk is turning a little bit lower, then the dollar Mex should play higher eventually. The emerging market currency should be under a little bit of pressure. Dollar Swiss isn't doing much, holding parity though. Dollar Swedish krona, dollar Norwegian krona, tightening in ranges, and the dollar yen. I wasn't short the dollar yen, but I was looking at this reversal here at 111 and change, this little false breakout above these highs, but I was short the Aussie yen. So I like the idea, and this was our chart of the day yesterday. I like the idea, as long as we're below the 200-day moving average here, to be on the short side of the dollar yen. Again, I'm not short at the moment, but I wouldn't mind being on the short side. So so anyway, there's just some food for thought regarding the dollar yen. And real quick, do we have some building permits, housing starts, corporate profits? Okay, some data coming out. So what I'll do, good morning, Stelios, is I'll look at the yen. I don't think we're going to get much movement here, but how's it going this morning?
I'm very well, thank you. I'm just trying to make some sense out of what's happening in the UK. And
yeah, so tell me about what we've got. Fill us in with the stream while I grab Andre, because Andre's coming on today. He's going to give you some nice looks at here. Andre, I'm bringing you on as an organizer, so you're coming over right now.
Well, let's have a look at the numbers in about 15 seconds from now. But as you mentioned, the sterling market had been quite buoyant and quite bullish going into today, because there was quite a bit of anticipation what might happen in terms of an extension, or other people were saying there might not be a deal, not be a Brexit at all. Okay, let's have a look at the numbers, and then I can building permits slightly better than expected, housing starts slightly worse than expected, actually quite a bit worse than expected.
Coming under Dollar yen coming under a little bit of pressure there.
Yeah, housing starts quite a bit worse.
Oh, housing
Okay.
market.
Yeah.
Yep.
Okay. Well, let's see how that develops. But what I would like to do is try to shed some light on what's going to happen in the next couple of weeks in the UK, because they
but wait, before you say a couple of weeks,
yes.
Tomorrow don't we have we have another meaningful vote? Is that what it is?
Yes, it's a Cooper Amendment, which is basically a chance for members of Parliament to vote to block a no-deal Brexit. So this is something that you know, the Labour Party do not want. You know, a no-deal Brexit. And actually, Jeremy Corbyn yesterday, if I'm correct, did say publicly that they will back a second referendum to stop a no-deal Brexit. So this is becoming quite important. And, you know, it makes sense because a no-deal Brexit is going to be clearly the worst case scenario for the UK going forward, at least in the short term. All sorts of uncertainty coming through, and the Labour Party seem to be very, very much against that. So that's what we're going to get tomorrow. And then PM May said that the big meaningful vote, meaningful is how they describe it, which is a vote on an amended version of an EU deal. We don't know the details yet, but there's going to be some kind of new deal put forward to Parliament to vote for it. That's going to be on the 12th of March. And then if that fails, or maybe should we say when that fails, there are going to be two more votes on the 13th, the 14th, and to vote whether there should be an extension and whether or not to leave without a deal. So what May wants to do is she wants to give the members of Parliament the chance to actually decide on how this is going to be going forward. My opinion, it's a bit late for this, but you know, it's how it's going to be. And May did actually talk about a potential extension. And remember, the European Union, they've said that they don't mind at all if there's an extension. Naturally, May did say that any extension would be short and limited, which kind of defeats the purpose, I think. But anyway, that's how it's going to be.
Well, so how do you explain the cable strength that we've seen the last 24 hours or so?
Yeah, I think cable strength and sterling strength in general has been because the market has been thinking that the chances of some kind of deal, or actually no, the chances of a no-deal Brexit are decreasing dramatically. That's what the market's probably thinking. And it kind of makes sense because you see there's a lot of jostling around. There's a lot of movements to try and avoid a no-deal Brexit. So I personally think that a no-deal Brexit is a low percentage event. I think if I would put a number to it, I'd say 20% chance. So, okay. and that's really what the bad case scenario for sterling is. So as long as you avoid that, everything else is to an extent going to be positive for sterling. And I think that's what the market started pricing in, getting a bit ahead of itself as it usually does.
Okay, so it's the avoidance of a no-deal Brexit that seems to be lifting cable from current prices. I mean, because as the possibility of a no-deal type of scenario started to make its way through the market at the beginning of this year, or beginning of last year, and that's why the cable sold off from the 140s all the way down to the 125s. We're starting to see the sterling bid up because people are thinking, okay, a no deal Brexit is probably not a realistic scenario. So now the cable's starting to catch a little bit of a bid. And I can't stress the importance enough that we're seeing in the euro pound, because it's not just the cable, catching a little bit of a bid. Also keep in mind that the European data has been extremely weak as well. So, you know, this is really a kind of a double whammy that's weighing on the euro pound, in my opinion. So it's not just, you know, when you're trading the euro pound, it's not just, you know, hey, I'm long cable. It's, you know, you're also short the euro here, in essence, and you know, Greece is always fixed. So keep in mind.
No way. The other thing we have to remember in terms of the UK is that the pound had been taking a beating some months ago because there was always the case of Prime Minister May losing her, basically maybe going to early elections, or, you know, she was in a lot of trouble at some point, but somehow she has, you know, she's still there. She's got 9 lives. Maybe she spent 8 of them, but she's still there. So that's slowly going away before the vote, because now we're so close to the vote. This, you know, we can assume that they're going to continue as they are in terms of, you know, Tories and the Labour Party. So that's another thing that's slowly faded away.
I see. All right, very good. Well, Dale, are you here, Coach?
Yeah, yes, buddy.
Yeah, so we're going to bring in Andre. Okay. You know, we got Andre that's coming in with us.
Hello,
good morning,
everyone.
Andre.
Hi.
Hello.
Hi, Andre. How are you, buddy?
I'm fine, thank you very much.
Good.
Well, you know, I know I'm really excited to have you here to see some.
You are trying to scare me.
No, well, maybe I am. But you know, I wanted you to show the traders that are here, you know, what. Well, first of all, what you bring. And I just gave you the charts, by the way.
Thank you.
Okay. Just so you can point out what you see regarding some harmonic patterns, and this way people can see what they're in store for when they are a ForexAnalytix subscriber, what kind of charts they can see. I always appreciate Elliott waves and harmonic patterns, Elliott wave counts, because there's something that it's harder for me as a trader to see. So that's why I rely on team members like you and Grega to see, you know, to put down on pictures for me what to look at. So
they're like roadmaps for me, Blake.
And it's great to be here.
Yeah. So Andre, what do you have?
Well, let's start where you left. So we have cable with the shark pattern at 224 extension. This one has been shared before the completion point. Once the price approaches the 1618 extension, I saw the potential for a pullback here. The market has found some support at 38% retracement from that swing at this point. And it's now, and it has extended to the 224 extension. So it's not the first time. I believe those who are our subscribers are familiar with this specific behavior. A failure from the 1618 extension as a resistance level, a bounce from the Fibonacci level. In this case, they used the 38% retracement synced with previous structure resistance level. 200 moving average also approaching from above, as I mentioned when I published the chart. So that's and supported by that bullish hidden divergence below. It has forced the price to break this descending structure that comes from above, so from the previous highs here. So at this point, I will not be surprised, and because we are facing, as mentioned by Blake, we are facing this strong weekly resistance above. I will not be surprised with a breakout above that resistance, but at the same time, since I have this pattern here with a very, at least in my point of view, of a friendly risk-reward approach, so we are trading. We expect the market the price to stay below or to keep trading below the weekly resistance for a period of time. For that period of time, I expect the price to retrace a minimum of 38% retracement, always considering the default target for the pattern at 50% retracement. Now, the reasons which will support that fall, I can support those. I can support this possibility with some fundamental approach, because I don't trade based on that. Based on what we have and based on the specific Fibonacci ratios, we are facing now a bearish shark pattern at 224 extension and with a minimum, let's say my minimum expectation at 38% retracement, which is synced with these previous structure highs. At the same time, and because Blake has also correlated those two, euro versus cable, with a perfect, and this one is perfect in a few criteria, at least in my point of view. First of all, we are trading oversold, and we are now facing potential bullish divergence. At the completion point, actually, the market has nailed the 224 extension a few points below the monthly and the weekly support level. I'm sorry. So we can say, okay, let's wait for the end of the day. Let's wait for the close price. But if I'm trading the harmonic pattern, I will try an engagement at this specific point. Why? Because if the market needs to retrace, it needs to retrace to the 38% Fibonacci level as a minimum, as my minimum expectation. That is my default target. That allows me to engage the market with a friendly risk-reward approach. And if I wait for the market to pull back, I will eventually face something like a pullback, and then I will lose some of well, if I'm trading the pattern itself, I will lose the risk-reward if I trade based on specific criteria and rules. So let's say at the same time,
call. It's a very contrarian call. And it looks like you might have, if you get a good close, Andre, to close this one candle close. What's this? A daily?
This is a 4-hour times 5.
Okay, so is the close of this candle important to the harmonic pattern, or not? Closing candles.
Well, I don't take those on consideration because, as I mentioned before, if I'm expecting, let's say, I'm trading the 4-hour support and I expect the market to trade lower, if I expect this specific point to engage the market, I will not wait for the formation or the close candle.
Thank you.
As I said, I will eventually I will face a bullish candle next to this one, and I will lose the risk reward that I need to put in action in order to follow my risk strategy. Okay. And that's I can try to. It's a very simple process. So if I engage the market to trade for a default 96 points, I never enter the market to lose more than what I expect to win. So I can create a motive. I can create a 1-2 risk reward situation to try one attempt to go higher. If I wait for the pattern to form a bullish pattern, and in this case, I need a candle closing above these ones.
Then you have a bigger stop and less reward. I get it.
I will not follow my criteria.
Let me ask you this: say, like 2 days ago, were you looking at this pattern as potentially getting down to that fib extension 224, so that you were prepared going into it?
Yes.
Okay.
Yes,
that's a big advantage, being, planning your trade ahead of time. So
constantly. I'm always trying to project the next pattern ahead or above or below, obviously the most recent price. And why? Because the market, based on the specific swings the market is offering me, I can already, as soon as the market print, let's use this as an example. So we have here a false breakout at 113 extension from this swing. So let me try to get this clear. So I have a 113 extension of this swing above, and the market has rejected to trade above the 113 extension, but it has touched at that level. So this is one specific criteria that allows me to identify the potential for a bullish sharp pattern if the market decides to trade below these supports. So the market has printed a support, a new higher high, false breakout, 200 moving average, breaking the previous support. I will start to project two advanced patterns below. One of them at 161 extension. As you can see here, the market has completely ignored that Fibonacci level here. And then the next one, the 224 extension. So this one obviously will they will try to keep the price above this monthly and weekly support. We have this small bounce above that Fibonacci level. And we can consider this as a potential shark pattern, but a failed one, but because the market didn't fill the specific criteria. But then if the market fails from here, I will expect the formation of this bullish shark at 224 extension. Failing to support this level, it will increase the probability to trade even lower. But if I trade a specific pattern, I will try to search for a very friendly risk-reward approach, and I will repeat that process over and over again. It's the same as trading a flag, a triangle, or heads and shoulder, or any other pattern. We identify the pattern. We already know where the pattern will invalidate. We keep trying to search for the best risk-reward conditions, and well, in this case, we have cable printing a bearish, trading at least at the bearish shark pattern territory, the 224 extension, and at the same time we have euro versus cable or euro versus pound finding some support at the 224 extension. Note that this is a 4 hours time frame chart. The market has already moved 34 points from this Fibonacci, so it was a fast recovery, at least for now. Obviously, and recovering your previous question, Dale, obviously, if the price starts to trade or wipes these previous highs from the previous candles, it will increase probabilities to trade higher from there. And those who are trading structure breakouts, eventually you will find some motive to try above these levels. But well, if you trade harmonics, you'll search for these specific price levels to enter the market and to take the best risk reward possible from that chart or from that structure. More, Dale, I don't know if you want to cross or to go through any other or particular instrument. I will push oil. Crude oil also very constructive, let's say, and let's start with this daily chart. So I published the potential for the development of these inverted heads and shoulder, also very similar as Blake and Steve at that period. We are now trading above the neck zone. And if we go into I believe it's clear, if you go into a 4 hours time frame chart, the advanced patterns the market forged there, all of those patterns they have been all shared among the community, so it's not new for anyone, at least for those who are subscribing our services. So let's start with this shark pattern at 168 extension before the pattern gets completed. I share that possibility, but at this point, and let me push back the price. At this point, I also published the possibility for the market to bounce and to form the shark pattern at 224 extension. It's this level here. So we have, and again, very similar as the shark pattern on cable. It's now trading the 224 extension. This was the first the Fibonacci level for a shark pattern, the 169 extension, and above the 224 extension. It's not the first time that we will see the price falling from the 169 extension, finding some support, and then later finding resistance at 224 extension. And if we press play, you will see not only the completion point of those patterns here, this Gartley pattern, actually this cipher pattern at 78% retracement. It has found support later at 38% retracement, as we will see, and now actually we are falling from the 224 extension. Fibonacci level. Let's try to move faster here. The cipher pattern, 78% retracement, found some support at 38% retracement, structure, consolidation, 224 extension, new a double top, kind of a double top. It's not a technical double top, and then a sink into the 224 extension again. So, and yesterday I published this chart on a lower time frame. This is like a 2 hours time frame chart. The market has also nailed the 224 extension and started to build some structure here, some kind of a double bottom again. Well, minimum expectations for the shark pattern always at 50% retracement. So I will not be surprised to see, as mentioned by Dale, and very well in my point of view, I will not be surprised to see crude oil retesting this previous support level, previous support, now resistance or potential resistance level, always considering the Fibonacci levels, starting with the 38% retracement, the 50%, and the golden ratio, which will put the price retesting this previous channel or previous structure. So from here, this is the shark at 224 extension. I will not be surprised with that development. On Aussie, let's try to let's see what the market will print us. At this point, I need to go into Aussie and go into a 4 hours time frame chart. I believe I need to increase this time frame into a 12 hours time frame. And well, let me hide all these draws. So basically, the first image that I get when I look into this chart is an head and shoulders. I have this neck zone, not an horizontal neck zone, it's a descending neck. I have this left shoulder, the head, and one eventual right shoulder now being formed at the 200 media moving average also. We are trading inside this bearish descending structure. It comes from the highs, from the tops. And I published it before. Actually, I published it once the price starts to approach this Fibonacci level, the golden ratio here. I shared the possibility. So the first image that I see here is a potential head and shoulder. So it needs to break the above or below, the previous structure support level in order to validate the pattern as a potential. Well, to validate the pattern, we need to trade below this structure support level. Until there, we keep falling. Trading below this next zone, I will see the market reactions and the price reactions once we approach those Fibonacci levels again, 168 extension and the 224 extension based on those on these false breakouts above. So one first high, the left shoulder, another high above the previous one, a false breakout, and a rejection into the Fib extension levels. If that happens, we will search for conditions to go longer, if that is the case. Also DAX, let me try to 12 hours time frame chart. We are now threatening this descending trend line. This is a structure resistance element. Let's call it an element of pressure. It's now being threatened and now with the weekly resistance right above. So this is also a Fibonacci level, the golden Fib extension level, a few points above the 38% retracement from the previous highs from this monthly resistance. So we are now trading the 38% retracement, the golden ratio, the bearish descending trend line with this sharp pattern printed at 168 extension. I'm not so optimistic about the possibility for a fall for DAX at this point. I will not be surprised with the retest of this weekly resistance. And let me try to go into a 4 hours time frame to explain the reason behind that idea. So usually I like to see those structures as with 5 waves inside. So at least point I need a new high. At least in my point of view, it requires a new high above, eventually above the weekly resistance, and then the price may react from there. So I'm not so optimistic about the possibility or the probability behind those patterns. Beside the fact that they are printed, nothing assures me they will not work from here. And if that happens, we have some Fibonacci levels for this major pattern, this higher degree. We will search for the 38% retracement, so that will put the price again 1106 again, and eventually, and this green pattern, this bearish alt-bat pattern, actually will search for the 38% retracement as a minimum expectation below this structure. So at this point, if the market breaks this structure, that will increase the probabilities to trade lower. Until there, I prefer to stay aside and to just following the price behavior. Dixie, I'm not sure if you have an interview today, Dale.
I do, buddy.
Okay.
You have time. Go ahead.
Dixie, approaching another bullish shark pattern territory, the 169 extension, this one at confluence with the 50% retracement, just a few points above, almost completed. The pattern at, if the pattern will work or not, we never know, but it will be supported also with the 200 moving average crossing or approaching from below. These heads and shoulders, I believe it's clear on a lower time frame. Let's go into a 2 hours time frame chart. And these heads and shoulders formation printed above with a default projection at 95, 93, that will put the price at the golden ratio, and it will invalidate the shark pattern at 168 extension, putting the price at the golden ratio. But note again, and always, we have a huge range for sharks between the 161 and 224 extension. So we need to take in consideration not only the pattern itself, but other market conditions. If you search for oversold conditions, or if you use other RSI, MACD, stochastic, whatever you want to use to support your entries.
So Andre, the key question, regardless of which pattern completes here, the shark here or the one lower, or the head and shoulders formation, what's the expectation after that?
Always the same. If the pattern starts to work, I always trade for the Fibonacci level. So if I can imagine this shark being printed at 96.17, if that happens, I have a default target, the previous support level, 38% retracement of the previous swing, okay, traded above. Always the same. Always considering the default target for this specific pattern. This specific, the shark pattern, will search for or tend to search for the 50% retracement, but I always take the minimum of a 38% retracement, and specifically in this point, in this case, synced with previous structure support. So right, this will be a nice, at least a decent and rational target. Yeah.
Any harmonic pattern after that completes, besides a 38% retrace, that would imply new highs in the dollar after we complete?
If the price bounces from this level, they'll imagine a situation where the price completes this pattern and starts to bounce.
Yeah.
Well, first of all, we need to take into consideration the sequence the shark pattern tends to provide us, or tends to print us. We are talking about the potential 5-hole pattern, and that pattern may also offer a short opportunity if the pattern starts to refuse the 50% retracement. Based on Fibonacci ratios, the 5-0 pattern will complete at this point. And that can force the price to retest the lows. We never know about that, but it can test the lows, or it can eventually trade even lower. And if that happens, I will search again for the 224 extension for another bounce later, or for a pressure level. But there's also a possibility, and if the price fails to find resistance at this level, because it's not the first time that the shark pattern fails the sequence of the 5-0 and starts to trade higher. And if that happens, we can use an extension from this low to these highs, extended above, and we will search again for the same fib levels, the 160-8 extension and the 224 extension, that will put the price at 97.55, and this will print another shark pattern.
Okay, so no new highs, and it's just a matter of degree what kind of retrace we get.
Yes, based on the pattern that it's printed, we assume the pattern will search for a specific Fibonacci level. Yes.
Okay. Well, thank you. Well, another great presentation, bro.
Thank you very much.
Thank you so much for opening our eyes to nature working in the markets.
Let's see what the market will print us, and we wait patiently until there. No?
Okay, that's what I was looking for.
Yeah.
All right.
Yeah. But those ratios that I'm suggesting here, Blake or Dale, I'm sorry, only if the market extends to these levels. So if the market completes the pattern, I will use an extension of these levels above, and that can change a little bit if the price trades a few points below. We need to adjust this Fibonacci extension too. But suggesting a bounce from these levels, it can happen. Starting with the 151 extension is the first sharp pattern, and then later a retest of this monthly and weekly resistance above. That is a fractal resistance printed.
So harmonics, like most methodologies, Andre, we're always reassessing, and it's ever changing. It's ever changing. Yeah.
Okay, we need to adjust. If the price somehow, if the price prints me the shark pattern at 168 extension, but it's not offering me other conditions to engage the markets, I need to.
So draw your formations in clay, not cement.
Yeah, exactly.
Right? Because clay, you can always just ball it up and start over again. Thank you, Andre.
Thank you too. Spencer. All the best.
Thank you very much, buddy. Spencer, I'm now going to make you the presenter. Really looking forward to meeting you. I watched your video on your website, so I'm now making you the presenter and looking forward to hearing your voice and seeing your screen. There it is, Synapse. How are you today, Spencer? Welcome to FACE. You have control of your mic. It's on the drop down. I'm not muting you. Okay, you unmuted. I see it. Waiting to hear you. Not sure. Did you call in? Still no voice. Let me mute you. I'm unmuting you. And there are mic controls at the top of the room to enable your mic. Drop-down menu. In the room. So I can't, we're having some, there you go.
Oh, okay. Okay, thanks for.
Hi, Spencer.
Hi.
Hi, very nice to meet you, Spencer. Really appreciate you coming in to address our community here in FACE, and what a lot of ground you've covered in your trading career and globetrotting. Why don't we start off with talking about how you got into the business and what inspired you, who led you into this industry, and you know, it's a long and winding road from the beginning of a trading career. How did yours start?
All right. Actually, I believe it's in the morning where you are, because like over here it's actually like I'm probably about going to sleep right after this webinar.
Okay.
It's like at the end of the day, because I'm
You're
based
in Singapore? I'm guessing you're in Singapore.
So it's like 10 p.m. here.
Okay.
So,
Good evening.
And yeah, so I started off back then when I was still a college student. So you know, when I was in school, I got interested in reading up on trading, investing, and at the same time, I really enjoyed traveling around the world. So after I graduated, I decided to make this you know, a full-time career, because I did spend a couple of years trading for some proprietary and private equity funds. But you know, those required me to stay at the desk full time, so it wasn't that fun. But it was a good learning experience for me to hone my skills. And so after I left the professional trading, I came out to trade on my own. And so at the same time, you know, while traveling and trading, I also decided to do some online education to share what I've learned over the years.
Okay, so I saw your video, and I think you said you've read 2,000 books, not all concentrated on trading. Can you name a few that had major impact on the way you look at trading, and maybe a couple that had a major impact on your psychology and how to live life?
So I actually do have the whole list on my blog, but the ones that I really like for trading, there are a couple of like the you know, the core textbook kind of books, like you know, the ones by like John Murphy.
Okay, know him.
Explain technical analysis of financial markets. Basically, it's those that you know those have very proper names for the books. And if you have taken like the CMT or the CFTE, the reading list usually have you know, they usually come with like all the best the best books, because they try to pick out like different books for different techniques.
Right.
So, but the books that I personally quite liked are a couple of books on like price action. So there aren't that many books on price action, but you know, there are a couple of authors. I think like Al Brooks, Bob Bowman, they do pretty good on price action.
Okay, so tell us, when you started your trading career, what asset class were you mainly involved in? Most people start with equities. How about you?
So when I was in college, I started off with equities as well, the Singapore stock market.
Okay.
And then I went on to like CFDs, which are kind of derivatives. And then when I went to trade professionally, I did like futures. I did E-minis. At one point, I also did options. But now I mainly do Forex. So I've covered most of the asset classes, I believe.
Okay, so that's interesting. And after you know, probing all those different asset classes, and now you say you mainly trade Forex. What is it about Forex that has the majority of your attention? What is it about the way the markets behave or trade that attracts you to Forex over equities that open and close and have thinner aftermarkets? Is it the 24-hour nature of it as one?
So that's one of the main things, because being in Singapore, the biggest stock market is the US market, but it's hard for me to trade the US stock market because the time is so different. So so Forex is like the next, you know, the next best thing, because it trades 24 hours. So you know, I can trade it like throughout the day. and it is also quite universal. So because in terms of like the people who the readers and my students, right, they come from all over the world. So if I were to like focus on a specific stock market, it is quite hard for everyone to have like a common market to trade. So the forex market is pretty convenient in that sense. And I think most of the forex brokers now, they have like derivatives like CFDs or futures that allow you to trade, different markets as well, like the indices, commodities, some have cryptocurrencies, all built together on one platform. So that kind of makes it easier if you also want to do some like intermarket, trading.
Okay. I found very interesting yet a diagram of that your trading account. You would take equity out of what you're generating from trading and move it into other investments, real estate, REITs, more stable, more stable, diversified type of portfolio. What about for people? Besides investing that money, I recommend that after windfalls, people take some of that money and spend it and enjoy it. And it makes it more real because you're making the conversion from digits to cash or something that you could spend and feel and touch, makes it real. While the money in our accounts, just like if you go to a casino, they convert your currency into chips so that it doesn't have the same type of psychological impact as you see them come and go. What do you think about that? People enjoying the fruits of their labor and spending some profits and not always reinvesting it.
Well, I mean, I think it basically boils down to the trade-off between spending it now or saving it and investing it to spend for later years. So it really depends on a couple of factors like, the lifestyle or where you are in your life, and also how much you're actually making, right? So for me, I definitely do spend as well, right? Because the travels don't pay for themselves, right? So I do have to spend the money as well, but I invest whatever is left, right? So it's kind of like you take it out and you decide, how much you want to allocate to saving, and how much you want to allocate to spending, right? So that's kind of really the personal preference. And sometimes I think it has to do with a bit of the cultural aspect as well. Maybe like in Asia, they tend to have like the more mindset towards saving and investing. Because I did spend like at least a year or so in the US. So the culture there is a bit more like spending, right, rather than saving. So
immediate gratification. You mean immediate compared to delayed gratification?
I'm not sure. I mean, I kind of like it just feels that there are like more things to spend the money on, when I'm in US, or maybe that's because I'm on a holiday there. But there's like
to be a patriotic American, we're taught to go out and spend to make the economy run. So anytime we're in a recession, we're encouraged to buy. So let me ask you a little bit about. I noticed you have 3 different types of trading strategies, and one I was wondering if you could give us a general description of what they are and how you came up with them.
So to describe my trading strategy, I think it is probably a combination of price action, technical analysis, and trend following. So I think these are like the 3 main pillars that I base my strategies on. It's based on like all the books that I read, based on what I've observed. I find that these tend to be more I think these tend to work well, and they're used by a lot of professionals as well. So I sort of built my strategies on this, and I decided to move away from the short-term intraday trading, which
so what would you consider yourself an FX position trader? Swing trader?
So it's a medium to long term, so probably more along the swing and position trading. What I did was to optimize my strategies for efficiency. So my goal was to, to spend like as little time as possible trading, right? So to automate as many things as possible, to the point where I won't have to spend more than 15 minutes a day actually, executing the trades.
So you use a robot?
So I would say it's like 80% or 80% automated, 20% manual.
Okay. All right. And did you code it yourself, the robot, or you hired someone to do it? And have you, Boris Schlossberg has made a big paradigm shift into
myself in the past, but I'm not familiar with the C+ language for the NPL, so I actually got someone to do it for me. But
you find yourself as market conditions changing, you have to tweak it?
Yeah, definitely. I mean, it's not like a robot where you code it once and you just it's not like a golden goose where you just create it and it churns out money. You do still have to take an active approach to tweak it and to observe the market and see how the system reacts to the market.
Okay. Would you be willing to share your screen and so we could see your setup and what you look at when you look at markets?
Yeah, sure. So so what I have for starters is something like a dashboard, right? So this is on MP4, but I've taken a screenshot because I'm using my Mac now. So this is basically what the dashboard looks like. At the start of the day, I can just do a quick screen to see whether there's it gives me an overview of the whole market, right? To see like which ones are moving, which are bullish and which are bearish. So this helps me to sort of decide which counters to focus on. And throughout the day, I have like push notifications as well. So the actual signals will be sent like via push notifications to my mobile device, right? So I don't really have to like track or monitor the screen, because whenever I get a push notification, then I'll just like open my phone and decide if I want to take the trade. So that really helps me save a lot of time, right? Compared to in the past where I had to like just stand in front of the screen.
Right. Okay. So it's set and forget the majority of your trading.
Yeah, kind of.
Okay. Do you have anything in your algo that takes partial profits and trails your stop after a signal has been, generated?
I would say those are still done manually because I feel that like the risk for each position has to be managed somewhat differently. So I don't have that complex an algorithm to do that at the moment, because you have to take into account like news events. So sometimes like when there are like major news events, your algorithm wouldn't know how to react to those events. So you still have to sort of like manually manage the risk.
Okay, so talking about news events, you're in Singapore, correct? You're in Asia. What's your view on what's happening here? I suspect you weren't around for the last big trade war that was in the 30s. Surprisingly, either was I. What's a view from Asia with what's happening in trade between China and the U.S. and Europe and the U.S., this, old order passing away and starting to be every nation for itself? What do you think the repercussions could be in the markets here?
Well, to be honest, because I'm pretty distant from most of the action. So what I know is what I get from the different news outlets, right? So,
okay. All right.
So I'm also not sure, because you read a lot on online. There's a lot of politics. So,
all right. Well, then let me ask you about a specific instrument. Euro's been range bound and boring and low volatility for quite some time. You're just waiting for new developments to give you a view on Euro, or do you have biases in your trading approach?
So the way that I do it, for example, like when I look at this table, right? So just a quick scan, I'm able to see that like say the Aussie, right, is currently like one of the most bearish, right? Because like Aussie CAD, Aussie New Zealand dollar, Aussie US dollar, and Aussie yen, right? It's like all bearish. So you can see that. Like a lot of the Aussie founders are bearish, right? So I'll be looking out for like potential short opportunities during the day, right? And also like the Swiss franc, right? It's also been pretty bearish, right? So I'll say like Aussie and Swiss, right, are like the most bearish, and then on the other hand, you have like the super bullish ones, right, like the pound, right? So with the pound being bullish, so I don't really like follow that much of the news because at the end of the day, like I focus more on like what has actually happened, in terms of the price movements, because like it is quite hard to speculate based on a news event, whether it is going to like negatively or positively impact the market. So I feel that it's kind of like easier to just look at the charts to see, what is like the collective sentiment, right?
Okay.
Actually
what does NA mean on Bitcoin? Not available?
Oh no, just because there's not enough. There's not enough data on the broker that I'm using to generate calculation. So
for a lot of I would imagine NA for a lot of people that got caught up in the mania, NA would mean never again.
Well, all right. I mean, interesting that you mentioned Bitcoin because so like this column over here is just like the percentage change over the past 20 days. So that sort of gives me an idea of what has been like moving. So Bitcoin actually has been up about 12% in the last 20 days.
Yeah.
Right.
Right. Yeah.
I actually did have the chart here. Yeah. So it's kind of like been bearish, right? So, but it's kind of like trying to form a sort of like double bottom, right? So it depends on whether it's actually able to break out. And if it does break out, it will probably break out around the same time. It will probably break this trend line at the same time, right? Because now it's like this huge giant wedge thing. So I guess a lot of people are just watching to see whether it actually happens, whether it actually can break out or not.
Okay. So nice look at the chart. So I'd like to see your chart again and ask you a few questions about that on Bitcoin. So this is your standard setup. Are those are all moving averages? How did you select those moving averages? Was there any rhyme or reason for, I know a lot of people use 200, but what about the 20, 50, 10, and the other? How did you come to choose those periods, those time periods for your moving average work?
So I would say my main technique is mainly classical in terms of like trend lines, support, resistance, and price action. So the moving averages are sort of just there, to aid in the analysis. So I don't actually use them to generate specific signals. So as a result, I just use like all the most common parameters to like 10, 20, 50. 100, 200. Those are like probably the most common parameters, like default parameters that people use. So I just throw them onto the chart because it kind of like just helps me see study the trends, but I don't actually really use them like much to generate.
Do you use them more for where support and resistance levels? Because I noticed right here you have quite a few converging on the sell-off that we had yesterday or Sunday night in Bitcoin. A lot of them looks like trying to support this pullback in Bitcoin, and then that green one coming in what might be an ascending triangle. If you're classical technician, that's a reversal formation, or could be head and shoulders, but looks like an ascending triangle to me. And then your longest term moving average seems to be what might be the next big resistance level if we break out of the downtrend. Am I reading it? Do you use them in that fashion?
Yeah, I would say that would. I mean, that's a classical interpretation of the potential double bottom or the ascending triangle. So
Yeah.
so currently it is like right in the middle of the. So I mean, ascending triangle is sort of still a consolidation pattern, and price being right in the middle of the range now would suggest that it's kind of like 50-50. So typically, I wouldn't. I wouldn't really do anything until it actually either it breaks up here or it breaks up here. So so in the meantime I would just leave it there and keep watching it. So
Okay. I noticed you don't use fibs, and a lot of people do. Any reason? Did you experiment with fibs and found that it was just noise for you, or just never really dug into them?
So I find that so I probably studied like almost every single technique possible. Because everything that has been in the book, I've probably come across it. So I did study, a lot of different techniques like Fibonacci, even like there's like Gann, harmonics, and so the thing about these methods is because I'm not sure. After trying it out, I find that it's if there are too many, like say Elliott wave, right, or Fibonacci, there are simply too many variations and permutations such that it doesn't really help in the decision making. Because I can plot like 10 different Fibonacci levels, right, and then you don't know like which is good support and which is good resistance, so it becomes impossible to trade. So like what a lot of people do is they find confluence, right, like whether the Fibonacci line confluences with say a support, support or resistance. But if that's the case, then I might as well just use the support and resistance because the Fibonacci does not serve. So I felt that the additional work, because you have to spend a lot of effort like plotting in all the lines and just for one chart. So I found that all the additional work doesn't really add much value. So I decided to just go with a more like clean approach. And
you're a young guy, and I think you learned the lesson early that our most precious currency isn't the Swiss or the Aussie, it's our time. So interesting that you've simplified things. I mean, you have that spreadsheet. You don't watch the market all day. Your charts are almost naked. Are you a little shy about that? But you trade naked, Spencer, whether you know it or not. And I admire that you, at this stage in your life, usually it takes people to get much older to realize that really their most important currency is their time. And so it looks like you've solved that riddle in your lifestyle. So what is your service? Is it mainly mentoring, teaching? I don't see that you provide any signals or trading ideas. What's the business model of Synapse?
Well, I'll say that mainly I did used to do a lot more like live training in Singapore. But I actually do also have like some online training. So a lot of time I spend like now blogging, creating content, right? So this is like one of the latest initiatives. I've actually like trying to compile like all the knowledge that I have from the books and what I've acquired. I'm trying to like put them neatly into a website so that anyone can like find all the content they need to learn how to trade. And
don't fall off that mountain. I saw you hanging on a cliff over there, buddy.
So I also have like some like I started a YouTube channel, right, to do some videos. I have a group as well and Telegram channel. But I also do have like I also do have a training program over here. So it is mainly online. So like if I don't like promote it much, but it's on my website, right? If anyone asks for it, then I'll just send them the link.
Okay. What do you charge?
Oh, well, it's inside the link though.
You know what? Yeah.
I'll say it's quite around. I'll say it's quite around the market rate.
It's kind of around the market costs of most others.
So
okay.
About 2,000 to 3,000.
Yeah. Okay. Never be embarrassed to quote your price. And Spencer, what a pleasure meeting you. You had me beat by leaps and bounds when I was at my stage of a career. You're already a pro. So, I wish you continued success with your own work and everyone who you mentor and Synapse Trading. Hope pips rain down on you and everyone you come in contact with. And like it or not, you're, as you know from my DM to you on Twitter, you're my trading warrior brother now, Spencer. What do you think?
Thanks a lot. It's nice. It's quite surprised to people reach out because I haven't been using Twitter that much. So I was quite surprised to see your message when you reached out.
Well, I hope it measured up to all the other places that you've been interviewed. I saw it. It's multiple television, radio, and other formats, and appreciate you taking the time to come and share your journey and philosophy with us today, buddy.
This is the first online, online.
Oh, yeah?
Yeah.
All right. Good to be the first. Good to be the first. Good hunting, Spencer, and thank you again. I'm glad our paths crossed. I'm glad I reached out to you on Twitter. Thank you again.
All right. Thank you.
All right. So everyone, you could follow Spencer at www.synapse Trading to go to his website. And that is also his Twitter handle. It says he doesn't use it that often, but that's how you could reach him. And looks like Spencer is living the dream, loves what he does for a living, gets to travel and follow that passion too. So let me wrap it with don't quit your daydream. If Spencer can do it, it's possible for everyone. And most of all, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios. You're very welcome, Joshua. And
I'll see you when I travel to you're staying in the US, Australia?
California.
California? Okay.
I'm on the left coast, buddy. Left.
Okay.
All right. Thank you very much, Spencer.
Bye.
All right. Goodbye, Face. Take it easy.